Drama in the Disney kingdom as the company names Nike executive Mark Parker as the media giant's next chairman, while activist investor Nelson Peltz fights for a board seat despite Disney's rejection. And here to discuss is Geetha Ranganathan, Bloomberg Intelligence Senior Media Analyst. Geetha, good morning to you. I think Nelson brings up a good point in his slide that Disney notoriously is not good with answering shareholders back and really welcoming outside views. How could Disney fix this? Because the stock is at a really, an 8-year low here.
Yeah, thank you so much, Brian. Good morning. Yes, he definitely does raise some very important points, but all of these are already well documented, well telegraphed issues. And I think the Disney board and the Disney management kind of recognizes a lot of the issues that Nelson Peltz has brought up. They are, I think, in the process of fixing most of those issues. And, with respect to your point about talking to investors, we had a very similar situation with Dan Loeb last year, and I think, Disney handled that really well. They did sit down with Dan Loeb. They did kind of sit down and discuss all of the different things that he was asking for. He was asking for a spinoff of ESPN, buyout of Hulu. Some of those points are exactly the same that Nelson Peltz is raising, but I think, what he's also going to push for is, succession, which has been one of the really pain points for Disney.
Geetha, at the same time, do you get the sense at all that Bob Iger is overconfident, sort of dangerously so, in both pushing off Peltz's overtures here and also just generally with the direction that he's taking Disney at this point?
I'm not sure I would call him overconfident. I think he is definitely the best executive right now to lead Disney. They're at a very pivotal moment in terms of their transition from the legacy TV business to the streaming business. He knows what he's doing. He's seen quite a lot of success already with his, streaming plans. Of course, they've run into certain issues, certain troubles, which, is arguably across the landscape. We're seeing this for all of the media companies in terms of their exposure to the legacy TV model. And I very much think that Bob Iger is taking the steps now to kind of fix that, to kind of reinvigorate the content creation process, to reinvigorate the talent, creation as well. It's going to be interesting because I think it's going to come down to execution. I think Bob Iger is laser focused on that. But this, in my mind, this push by Nelson Peltz almost seems like a little bit of an attack on Bob Iger. And I think it's an unnecessary distraction. I think it helps in the sense that it does keep, management honest. It keeps them on their toes, especially when it comes to that issue and succession. But at the same time, if Bob Iger is going to spend most of his time just kind of looking out for his job and keeping it, that's not necessarily good news for the company as a whole.
But Geetha, isn't Bob Iger, I think the street is always so quick to praise him, top executive, of course, but isn't he part of the problem? And secondarily, isn't Mark Parker part of the problem as well? These two folks signed up on a very aggressive acquisition of those Fox assets that, to Nelson's point, may now be worth far less than what they paid for at the top of the market.
I think one could argue that in hindsight, any media deal done in the past is going to look like, you kind of overpaid for it. I mean, that's just the kind of nature of how media multiples have compressed over the past year or so. But yes, you bring up a really, really good point, Brian, in terms of, just kind of looking at how they're going to take this forward, in terms of the strategy. So, yes, I think, Bob Iger obviously has his task cut out for him. We have to see how it goes forward.
Geetha, what do you think is the single most important strategic move that Iger needs to make in the coming year?
So it's all going to come down to the streaming business and about how they are going to reinvigorate profitability in that business. So Disney has already talked about kind of keeping its content budget pretty much curbed in the 30 billion range. But now it's about kind of executing on content creation, on content distribution. We've seen a lot of their content kind of over the past few years really underperform, if you will. One of the prime examples has been animated content. I mean, Disney has been a giant for all these years, whether it came to Pixar, whether it came to Disney animation films. And over the past few months, we've kind of seen seen that really underperforming, whether it was Lightyear or some of their more recent releases, they just haven't taken off. And even if you look at their other movies and, their other franchises, whether it's a Marvel or a Lucasfilm, I mean, there is a lot of franchise fatigue kind of setting in. And so they do have to do something a little bit different to make sure that, that process remains reinvigorated. At the same time, they do have to kind of keep their content spending in check.
Do you think Disney has taken seriously and run the numbers extensively on a spinoff at ESPN?
I think they have. I mean, this is the issue that keeps coming up every few months for Disney. ESPN, we have to remember, yes, it is a troubled business. It's a challenged business model, but it does at the end of the day throw out about $4.5 billion in EBITDA every year. That's about 25-30% of the company's operating profit. So it's absolutely paramount to the rest of the business. It's been kind of instrumental in funding Disney's streaming ambitions. So they have to be very careful. I mean, this is a very careful balancing act. It has been all the while for Disney's management team, for Bob Iger. I don't necessarily think that they're looking to spin it right now, but I think what Bob Iger and his team is going to do is really scale down the level of sports rights. We've kind of seen them already do that. They let go of, the NFL Sunday Ticket. They let go of, Big Ten rights. They let go of, IPL cricket rights in India. So they're taking a very, very disciplined approach. And I think that's what they're going to do going forward as well when it comes to upcoming sports rights renewals.
We shall see. Geetha, thank you so much. Good to see you. Geetha Ranganathan, Bloomberg Intelligence Senior Media Analyst. Appreciate it.